Welcome to Money Talks, the ultimate financial news upload, where acknowledgements in Parliament join the money getter duo, CC and Cecil B, as we unravel the mysteries of finance Monday through Friday at 8 p.m. From the latest in fintech, cryptocurrencies, real estate, electric vehicles, IPOs, and Wall Street, to the rise of robotics and AI, we cover it all. So tune in as we shine the spotlight on how Black entertainers and creators alike are shaping finance and tackling IPOs, giving you the information you need to thrive in today's economy. This is Money Talks. Good evening. Today is Monday, December 16th, and you're watching Money Talks. I'm your host, Cecil B. Money Getter, and first up tonight in sports news, Beyond MJ, elevating Black ownership in professional sports. Ownership of professional sports franchises for people of color remains an elusive goal, according to an Institute for Diversity and Ethics in Sports report on the NBA. More than 83% of players are people of color, and the NFL players of color make up 69% of the league. The report on Major League Baseball found roughly 38% of the league's players are minorities, but those numbers are hardly reflected in the ownership ranks. Here's a quick look at people of color who have a majority stake in professional sports franchises. First up, Michael Jordan and the Charlotte Hornets. Michael Jordan is a trailblazer when it comes to Black ownership in professional sports. In 2006, Jordan joined the Charlotte Bobcats as a minority investor alongside BET founder Robert Johnson. In 2010, the NBA Board of Governors approved Jordan's $275 million purchase of the team. The team changed its name to the Hornets in 2014. While there are minority investors with minority shares sprinkled throughout the NBA, to date, Jordan remains the sole principal Black owner of an NBA franchise. Then, in 2021, the NBA legend announced he would be partnering with Denny Hamlin to own a NASCAR Cup team with Bubba Wallace behind the wheel for 2021. Jordan brought a needed touch of diversity to the NASCAR ownership ranks and became the second Black car owner of a full-time team. Brad Daugherty, a former NBA All-Star who is currently an analyst for NBC Sports, is a co-owner in JTG Daugherty Racing. Jordan will become the first Black majority owner in a full-time race team in NASCAR's Premier Series since Wendell Scott owned and raced his own cars in the 1960s and 70s. Get in the comments and let me know what you think and how you feel. And up next, in Buzz Talk, gold shines bright, ready to dominate the decade as Bitcoin soars. Analysts predict a good year for gold in 2025 after it poised for the best annual performance in over a decade in 2024. However, Michael Saylor, co-founder and executive chairman of MicroStrategy Inc., has called for a dramatic shift in U.S. economy strategy, urging the country to abandon gold as a reserve asset in favor of Bitcoin. The World Gold Council, in its 2025 outlook, has outlined 3 scenarios for the precious metal in the upcoming year. According to them, gold will remain range-bound if existing market expectations are correct. Explaining its rationale for the range-bound assertion, the council notes that a combination of higher rates and lower economic growth could negatively affect investors and consumers. On the flip side, significantly lower interest rates or a deterioration in geopolitics or market conditions will improve gold's performance. JP Morgan has said that it expects gold prices to find continued support from central banks, particularly in emerging markets. Critically, gold, the original safe haven asset, can serve as an attractive hedge against both geopolitical risk and uncertainty around sovereign debt and deficits. Saylor labeled gold as a shiny dead rock. If you want to elevate the U.S.'s economic leadership in the world, there are two very simple strategies, Saylor said. Dump the gold and buy Bitcoin. Get in the comments and let me know what you think and how you feel. And now, Tech Talk. Affirm lands a $4 billion loan, which is a game changer for the buy now, pay later expansion. Friday, fintech company Affirm Holdings Inc. stock gained after the company announced a long-term capital partnership with Sixth Street to invest up to $4 billion in Affirm loans. The stock gave up the gains in the trading session. Through its asset-based finance platform, Sixth Street will invest up to $4 billion by purchasing Affirm loans in a unique asset co-structure pursuant to a 3-year forward flow agreement. The transaction represents the most significant capital commitment Affirm has secured to date. It provides additional off-balance sheet funding, allowing Affirm to extend up to more than $20 billion in loans over the next 3 years as the company continues to scale its payment network. In October, SoFi Technologies, Inc. announced a $2 billion loan deal with funds managed by Fortress Investment Group to develop SoFi's capabilities in its loan platform business. Affirm reported its first quarter revenue of $698.47 million versus $496.54 million a year ago, which topped the analyst estimate of $664.1 million. EPS loss of 31 cents beats the consensus loss estimate of 35 cents. Affirm expects second quarter revenue of $770 million and $810 million. Price action. Affirm stock is down 1.31% at $67.87 at last check on Friday. Get in the comments and let me know what you think and how you feel.
34 Listening Library YouTube channel for self-help shorts and audiobooks. Follow us on Instagram at 734 Miscellaneous LLC to continue our journey of growth and success together. I'll see you at the top. Holla.